Chapter 1.1 is about completing the accounting equation. Before we get started, got some terms we want to talk about. First term we're going to talk about is the accounting equation, and that's an equation showing the relationship among assets, liabilities, and owner's equity. We're going to be talking a lot about that during this class. Assets. Assets are anything that of value that is owned and can be turned to cash. Equities is our next term, and that is the financial rights to the assets of a business. Capital is the account used to summarize the owner's equity in a business. Ethics is the principles of right and wrong that guide an individual in making decisions. An expense is a decrease in owner's equity resulting from the operation of a business. Oftentimes, in order for a business to sell something, they have to spend money, and that is an expense. Liabilities, that's the amount owed by a business. If you look at the middle of the word liabilities, you'll see the word bill. If you, as a business owner, have a bill that you owe someone some money, you have a liability. Owner's equity. It's the amount remaining after the value of all liabilities is subtracted from the value of all assets. Owner's equity. Revenue, is an increase in owner's equity resulting from the operation of a business. Sale on account is going to be a sale for which cash will be received at a later date. And then finally, transaction. It's a business activity that changes assets, liabilities, or owner's equity. So let's take a look at what is the accounting equation. The accounting equation is actually a fairly simple equation, and it's assets equals liabilities plus owner's equity. It's a very simple algebraic equation. You might see it as A equals B plus C. We just use assets equals liabilities plus owner's equity. The one thing that you have to realize with the accounting equation is it's a balance equation. It must always balance. So anything that you see on the left side has to equal what is going on the right side. So the left side has to equal the right side. We can vary the accounting equation, such as we can go assets minus liabilities equals owner's equity. We can also say assets minus owner's equity equals liabilities. For the most case, though, you're going to see assets equal liabilities plus owner's equity, but simple algebraic. A real easy way to remember the accounting equation is think ALO. A equals assets, L is liabilities, and OE is owner's equity. ALO is your way you remember what the accounting equation is. Let's talk a little bit about the accounting equation and how to solve it. If you take a look here on our first line, we have 105,000 in assets and 47,000 in liabilities. We need to find our owner's equity. Well, in order to find our owner's equity, we're going to have to subtract it, and you will find that we will get 58,000 for our owner's equity. Moving on to the next one, you see we're trying to find the assets. We have our liabilities of 47,000. Our owner's equity is 16,000. We're going to add those two together since they are on the same side for us, and we'll find that our assets are $63,000. Once again, notice how the left side equals the right side. That is a key component. Assets equal liabilities plus owner's equity. Next one, we have 5,000 in assets. We're looking for the liabilities, and we have 2,700 in owner's equity. So what we're going to do is we're going to subtract the owner's equity from our assets to find our liabilities, or 5,000 minus 2,700, and that gives us 2,300. And the next one, we have 142,000 in assets. We have 172,000 in liabilities. We're trying to find the owner's equity, so we're going to subtract the assets from the liabilities to find our owner's equity. And in this case, it's a negative 30,000, and we'll put that up there. We have $25,000 in assets. We're looking for our liabilities in the next one, and we have a negative 1,500 in owner's equity. It is possible to have negative owner's equity. We hope it doesn't happen often, but it is possible. What we're going to do is we're going to take 2,500 minus the 1,500, which will ultimately be an addition, which will give us 26,500 for that. And then finally over here we're trying to find the assets. We know our liabilities is $67,600 and our owner's equity is $125,000. We're going to add those two together and we're going to get $192,600. And that's how we're going to complete our accounting equation. Once again, the big thing here with understanding the accounting equation is assets equal liabilities plus owner's equity. Left side equals right side. The big thing here is if you need to find owner's equity, you're going to subtract, and you know the assets and the liability, you'll subtract the assets and the liabilities to find our owner's equity. If you need to find the owner's equity, if you need to find the liability and you know assets and owner's equity, you'll take the assets, subtract them from the owner's equity to get the liabilities. And then finally, if you need to find the assets and you know the liabilities and owner's equity, you will just add the liabilities and owner's equity. Hope this helps, and we'll see you at the next lesson.